Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So for me, it was a bit of a frustrating day. I feel like yesterday there was a lot more active, conducive to my style. So when that's the case, you have to take a step back. Early on, the futures were down. We tried to outline that floor in the market, that 2-day pivot that turned into a 3-day area to trade against. That was 133.77 or so, right around there. And I actually didn't do what I should have done as far as the way to manage positions if you were really that convinced we were going to be heading higher, which I was a little skeptical. I thought maybe they would shake the tree up a little bit more. When we went down to test that 133.80 area, what I should have done is I should have taken off some of my hedges and added to some of my good longs. Instead, I added to my hedges, so I added to my shorts, which hurt because we bounced off of there, and I didn't add to the stock showing relative strength. I only did 1 or 2 of them. So all in all, we had an up day, and I lost a little bit of money. If I would have just stayed the course and kept maneuvering the way I've been maneuvering for the course of the past 30 or plus sessions, it would have been a great day. So as the rally gets a little longer in the tooth, it gets a little harder to stay in the same type of complexion or the same type of managing of positions. So for me, it was a bit frustrating, but overall, very healthy, constructive action. You look here at the chart. This is what I'm talking about. Here was that 3-day range. Okay, first of all, you take a step back and you look here. Here is the gradual uptrend that started October 4th. You had a low, higher low, and it's continuing. We haven't gone back and retested this gradual uptrend since early December. So then you talk about this accelerated uptrend. The accelerated uptrend that started when we broke this descending. I've talked about it many times because descending channels like to break to the upside, and that's what happened here on December 20th. And this is when I started to take a portfolio approach, 10 to 20 stocks depending on what's going on, and it's been very fruitful the entire way. And if you look at this chart, let me just show you this area so you can see it a lot closer. The whole way has been pretty methodical. Here you gapped up, and then you had like 2 areas or 2 gap downs or 2 tests of the gap that wound up holding, and then we went again. Then we built a 2-3-day floor, and then look what happened here. They tried to break it below, but then buyers came back and closed it above the floor. Then you methodically went a little bit higher, and then here you go, this longer area that we tested because obviously it takes a little time, more time sometimes, to absorb a move that's been heading higher. And then up here, it took less time, which is a little, I guess, different. So here was that 133.77 we talked about. Yesterday was 133.83. Today, it briefly went below it and then snapped off there really quick. So overall, the markets are now at new highs on the year. So congratulations to all of you long-only guys, and congratulations to everybody who has a 401k or a 529 or have been putting monthly money in. That's what my wife does. That's what I do for my son. So besides my active approach, which we've been doing here, there are ways to take advantage longer term with other vehicles. So either way, the media is going to say new highs on the year. Congratulations. But at this particular point in the rally, when the RSI is at an area that it's only been, I think, 125 times versus 4,000 days, you got to get a little skeptical. Doesn't mean you start fighting the tape. It doesn't mean you start laying on shorts. It doesn't mean you abandon the course. It just means just take it into a lower gear and stay with it, but stay with it with less. If you look here at Apple, I came in long, and unfortunately, fortunately, made money there. I sold early, and now I'm flat Apple. I feel a little naked. But I went long this day. Obviously I had the Apple earnings. I had the Apple options into earnings. It was very fruitful. Then, after 3 days, I bought a little bit right here, added on this pivot, and now I took off today. It's been, I've traded it in and out a few times on the way, but I've always been net long during this time period, and now it closed pretty high. It's away from the 10-day, away from the 20-day. It could continue. This stock can go parabolic. It's on its way, so don't be just blindly shorting it. And if you're a macro investor, it's going to be really hard for me to get back long this thing. So stay the course if you're going to do that. Stock's still is very undervalued, in my opinion. If they would just split the damn stock, the stock would probably be at 1,000 come January if they did a 4-for-1. It's not going to get there this way because it's just perceived to be expensive. Meanwhile, I think the P is like 13. They grew year over year like 137%. Their revenues grew over 80%. Just unbelievable company. Anyway, so that continued higher. And then there was really not much action in the other high beta tech stocks. Google needed a rest, and that's what happened here. Just real quickly, no big deal. Maybe it sets up for another move. This was when it crossed into the gap. This was your nice active trade. Here was when it held the support, the 200-day, which was your average down if you were holding it for a macro trade. But now the gap is pretty close to filled. So a lot of the bullish upside momentum is going to be out of the way. But I guess if it were to hold higher here for a few sessions, we could get another cash flow type trade through the previous high right here. As far as Amazon, it was up a little bit today. I guess you have like a new mini range here, right, in a little 3-day area to potentially trade. Doesn't look really good to me. Filled a big portion of the gap, hanging around. I guess it held 50% of what this move of off the bottom. If you remember on the earnings, we talked about 170, 173. It was a nice 3-day move off there. So we'll see what happens if we coil here. Some of the Chinese internet guys have kind of had a play ever since Sohu. I think we just got to wait for earnings from Baidu. It's still very sloppy. It's controlled by a pretty big resistance area. I haven't really looked at this or traded it in a while. You do have a rising channel that if it were to break, it could get in a little bit of trouble. But again, this has just been out of play. As far as some of the big cap stocks, IBM, still hanging around. They drew this line. Didn't quite bust through yet, but this is on the radar. I guess if you are in a tier 1, it makes sense because you'll be in the game. And then if it were to get above this 194, it could continue. As far as, let's see, what's Intel doing? Intel's hanging around. A lot of stocks just hanging around, guys. Some things are extended, some things are hanging around. This Intel looks like it's getting set up to trade above this 27 and continue. Still looks pretty good, giving you no reason to get out of it. Here's where it broke above the previous resistance, flagging really well. This looks like it can go again. Microsoft is now comfortably over 30. You guys remember when I started talking about this thing? This was my mega cap surprise. Right when it broke this downtrend, I was on Bloomberg. I said it was acting frisky. And this is very, very frisky for any stock, let alone Microsoft. So, that's still hanging around. BMW was a little bit strong today. We talked about this a few days back. It was I'm still long it in this flag. It hasn't really extended and really started going really strong to the upside, but it's got room to about 100. CRM after yesterday's move, some decent digestion. If you're still in there, it's giving you really no reason to get out. Here's where it broke above. And then I guess, anyway, this 125, another little bull flag, continue. And then today, you had that trade in Netflix. That's where I actually made most of my money in the morning. It was down like 75 cents. I was targeting that little flag area, 130.50, and it went through it, and I sold like 131 and change. And then later in the day, after all the shorts were somewhat squeezed out, it got weaker and it failed. So who knows? Maybe this leads to some lower prices. Here's your Netflix. Here's this rising channel. It tried to break above it today. Earlier, I did a video with Taylor on this. It broke through. So this was your first buy in the morning and then came back below. I wouldn't say it's an extreme 80-20 top, but we had the same type of situation right here. And it led to a nice $5-6 move. So I'm doing the same thing. I'm short a little bit. Tomorrow I will be adding below today's low if it opens up. If it opens down, I'll get a little paid. But here's that's the the strategy. I'll open it up so you guys could see it a little bit more. There it is. Bit of a shooting star top, not so severe, but last time it didn't even turn red and it led to a nice little move lower to test this lower end of the channel. So maybe we get another Q trade here, and it's not so bad to have a little short exposure also. As far as JCPenney's, it was very slow, wasn't good, it wasn't really a squeeze type play, so it didn't really give us that push through. So if you look at JCPenney's, it's still okay. For me, I was just, I guess, a little bored with it. I would have thought that it would have been a bit more powerful, but maybe the shorts didn't fully give up yet. I think Sperling's still long this one. Nice bull flag there. could continue higher. I didn't take it home long, which I guess I got a little bored with it. Qualcomm was good. Qualcomm, I put in the same little time or the same type of pattern as your Apple. That if you look overall here, remember we talked about this pattern and how it was an accumulation. You had a gap up on earnings above it. Remember we had options. That was pretty nice. And now it's holding above it. So what I wanted to do is I wanted to enter yesterday, okay, right, when it turned green. And you had your little flag here, still with your powerful earnings gap. And then the add for this Qualcomm was right here when it traded above this little pivot, and it closed strong. Your next add should be as it makes new highs around 62. I'm in like tier 1.5. If you want to see Apple real quickly, not obviously the different stocks, but same thing. Remember, gap up, third day went green. Here was your add as it cleared this area, and then it traded above the earnings high, and now look at it. So Qualcomm maybe follows the same footsteps with a little bit of a different type of motion, but it's worthy of a swing trade and it's worthy of a macro investment. As far as the banks are hanging around. They're at some pretty significant levels. They're still not like breaking down, but they're absorbing what's been a really nice move. I talked about this as being a January effect play, getting long in December, and it went a lot further than we would have thought with the home builders. You look at Goldman Sachs, still. Look at this resistance right here. This will be very interesting, guys, to see whether or not Goldman Sachs is going to be able to break above this. If it were to break above this recent pivot of about 117.50, you're going to see another nice move in these banks. It's come a long way. This is when we really started getting bullish on it when Goldman came out with its earnings, and it acted well. And since this 100, we talked about it getting to this area, and now it's here, and it's actually going sideways. I think the longer it goes sideways and the longer it hangs out up here, the more prone it'll be to move through there. JP Morgan, I'm long some of that. It's acting okay, nothing to really write home about, but it's also hovering in front of a very, very big level. It's hard to get through these type of levels when you've had such a move from the lows. So with that said, you can't get too frustrated with it. You just got to give it time. So I'm giving it some time, and if it starts to get above this 38.50 area, I will grab more to see if it can finally get above and stay above. Morgan Stanley also acting really well, hanging around. Actually, look at this. This is showing relative strength because look, I showed you how the other ones didn't clear. This has already cleared this October pivot. So Morgan is actually acting better than its peers. So this is something that's showing some relative strength. Let's take a quick look at Citi. Citi looks like the rest of them. Nice little bull flag. So look at this bull flag here, guys. People would think that this market can't go anymore, and I'm not saying I'm not one of them or one of them. I think it can go higher. I'm just hoping for a little bit of a rest. There's no pullback here, guys. If you were short Citigroup and you see it go sideways and you go a time consolidation after a huge move from here, even from the lows, like you have a few different trends here. Like this is one trend line that it's well away from. Here's another one, which it's not even pulling back to. So this is showing some extreme strength. Through 34, people are going to scramble. Market's going to continue higher. So let's keep that in mind if all you have is short in the brain, which you shouldn't. Yes, there are times to be a little less involved, times to take a little less risk. This might be one of those times, so it doesn't mean you just have short on the brain. OAHs were down a decent amount today. They turned higher. This group still looks good. I'm still in my OAHs, and it tested that lower area, closed strong. If we get another day or so like this, I'll be buying it through this resistance. So remember Jim Cramer's segment, we put it on inverted head and shoulders, left shoulder, head, right shoulders, tier 1 buy, add above this descending trend line. Now the longer we hover in front of this neckline, the more of a platform we're going to have to bust through it. And some of these stocks are still hanging around. Schlumberger hanging around above this resistance. Look what Caterpillar did when it hung above its, remember this pattern that we talked about way back when? Right here. Okay, this was the channel. And this was your buy when it broke this descending channel, this descending little trend line. And then here was your add-on, and it wasn't really going so quickly. Now look where it is. Remember that little cute short we had into earnings, 112 to 114? Well, it's just consolidated, and now it's flagging. This thing also hanging around, looking like it's ready to break above this area for momentum. So just a quick note, when you trade stocks for momentum play, you only stay with it if it holds above that momentum level. Because as we get higher and as we push further, the market's going to be more prone to that push-through failure, which is what I call the Red Dog reversal, kind of like what Netflix did, where it goes through an important level, you make cash flow, you high-five, you make a lot of money, but later it comes back below that level, then you have to sell it because that no longer, it's no longer valid as a momentum play. Yeah, it might mean it needs more time. It doesn't mean it's game over, but it means that that momentum that was there didn't stay. And the shorts that were trapped got a way out. So with that said, even look at Caterpillar, so to speak, come into this area, just to show you with the overall market. If, Caterpillar were to trade through this bull flag for momentum, you got to make sure once it goes above this area, it doesn't tail and come back below it. So and just realize that there are different trades here. This was the trade off the low. Okay, here was your nice add-on. Here was a momentum breakout, and now it's all the way up here, and this is like your extension. So when you're playing it for extension, you just got to be very, very careful if you're not committed, and you need to know your time horizon. So this pivot here on this one is like 114.65. So just know that. It could be a really good trade there, but just know if it trades above and comes back below it, you take a little caution. Same way, if you just backtrack, remember the Red Dog reversal down here? Everyone thought that we were going to go a lot lower, just to give you a little bit of the thinking on the Red Dog reversal. You remember, this is when the market looked like death. This is when we looked like we were going to break below. And actually, let me show you two in the spiders, because some of you guys are new to the site and you haven't seen this. But remember this channel, okay? First, this was the move when we broke below the 12. I'm going to even backtrack a little bit more. Give you guys a little bit extra juice here. Remember this head and shoulders pattern that we had that Patty Don blogged me with? Okay, this was that left shoulder, head, right shoulder. This was your get out of Dodge at 1250. Here was your measured move from, the highs down to, I believe we said it was around 1170, but it overshot. So here was that head and shoulders. This was your acceleration got crushed. Okay, so right here is when everyone thought, including me, that the market could hit 1030, 1050, because if we broke below this level, you go to your monthly chart, and the next level underneath it was right here. So just I'm just talking a little bit here. Was right here. So that was your next point of reference. Obviously, that didn't happen because look what happened. The sellers lost control, pushed through. So that means anyone who was long versus level got stopped out. So let me show you a little closer. So anyone who said, okay, I'm long versus 1100, it breaks 1100, it could go to 1030, I'm out of the way, got out of the way. And then, but what happened in the afternoon is the sellers dropped the ball, the bulls took back control, and we closed above that level. So anyone who sold into this stop out area, had to chase it back. And anyone who said, okay, I'm going to add to my shorts here because it looks like we're cascading down and the MACDs are showing it, boom, they got caught short. So that's why it was a powerful reversal. That's why I was so excited when I saw this. That's why I said it's a day to take notice. And then when we, when we broke this area, remember the commitment to the move? I was on Bloomberg that day and we sold on the jobs number. And I'm like, you know what? There's a 75% chance as low as the locust. Look, we're seeing some commitment. That was fast and furious. There you go. So what you don't want to do is, same way that you had the reversal here at the bottom, at the top, the same type of thing happens when everyone gets super excited and just say it goes through and then, it creates that tail, comes back, engulfs, and you get it on this end. So here it is on the reversal low. We haven't seen a reversal top yet, and until we see that reversal top, and then until we potentially break what has been an ascending channel, which at some points they do break, same way descending channels, like we saw right here, get resolved to the upside. Well, ascending channels, which means they're following a nice uptrend, when they get broken, that's when you get corrective action. So just thinking ahead, so when you hear some of my terminology, if you're new to the site, these are the type of patterns that we follow and we watch them. We stay with trends until they break. We don't chase excitement. We use stops. We don't, catch a falling knife. We play stock for momentum plays. When the momentum stays there, we rarely take stocks into earnings. We take options because the risk is premium paid. So there's a lot of things you learn over the course of the years as you're a member of the site, or at least things that I do. You don't have to do the same things I do, but these are some of my rules, and some have adopted them, and that keeps you consistent, safe, and on the right plan. And that's besides, coming in real early, putting together a game plan, and getting your A, B, and C list, and a lot of things that we teach in our education. So if you feel like you're a little lost as you watch the morning call, the recap, visit the site and look at our momentum trading course. Look at our active trading course. We also have now a swing trading course. It all depends on who you are. Make sure you learn our terminologies, learn why Mark is doing certain things, learn why Mike or Steve or Evan or Andreas or, you name it. There's a lot of content providers. The more you learn about the strategies we talk about, the more conviction you will have to stay with them, and that means more money in your pocket at a future time. So all in all, today is what? Oh my God, it's only Tuesday. Jeez. We got a long week left. Let's see what happens with Greece overnight. Do they adopt the plan, and do they have a orderly default versus a disorderly default? I think what happens is, they don't default, okay, and then the market gets excited. We open up, and then that might be the short-term top. The same way when we finally killed Osama bin Laden. Remember when that happened? That was right here. This was the day we killed Osama bin Laden. Anyway, that should have been a big rally. It turned out to be a topping tail. So actually, let me show you that a little more close up. To show you how, what I mean is when you see this was your move up, here is when it went higher, closed below the previous high, and that wound up being a day to take notice that turned into the top of last year. We haven't seen this type of day, which this day I would have thought would have been a bit more extreme yet. So until we see that, stick with the trend. And right now, the trend has been up. Have a good night. See you at the morning call. Sorry about the credits that came in a little early. Bye-bye.